Hello, everyone. Welcome to our podcast, Deal Diaries. I'm your host, Shalu. Today, I'm co founder at GrowthPal. In this podcast, we discuss many stories of successful business owners, global buyers, and other stakeholders globally. And today, I'm excited to welcome Archi Bagchi with me. He's the founder of Thoucentric, a specialized consulting firm which was acquired by Xoriant in 2023. In this episode, we'll discuss about Archie's journey from building Thoucentric to successfully selling to Xoriant. So, congratulations, Archie, and thanks for joining me. How are you doing today?
Doing very well, thank you. Thanks for having me. It's a privilege.
Yeah. So, thanks, Archie, for joining us. Can you share a bit of your experience, your background, and what inspired you to start Thoucentric?
Well, a bit of my background. I graduated from IT Kharagpur in '98, did my civil engineering, worked in Wipro as a software engineer for about a year, and then did my MBA from IIM Lucknow. Joined GE in their IMLP program for 2 years. Then I was with JCase, which is now Genpact, in a black belt role. Then moved on to HP, did multiple roles, was a project program manager, then managed a supplier. I was in the support and services space for HP printing and personal systems business, and managed a cross-sell program. So different roles, different areas, but primarily on the buyer side of B2B services.
Okay.
Now, being in that space, there was definitely something I observed that there's a consulting type of service that is provided in the market, and there's an IT service provided in the market. With handovers becoming an issue, there were very distinct seams between a
Okay.
consulting project and a technology project. And that was kind of a space that seemed to be very exciting to fulfill, given that I was close to that B2B services space. The larger idea was to bridge that gap, if
Got it.
possible. But there was also a personal aspiration of, starting something of my own, where everything from scratch will have a little bit of my ideas in the design, and therefore you make an organization or a place that is unique. So yeah, multiple ways to get that motivation to start something.
Nice, nice. That's good to know. And what triggered you that it was the right time to sell the company or join hands with Sorian?
Yeah. So the right time is typically over a phase, right? So the right time kind of begins when you believe the organization can run on its own.
Okay.
Maybe it may not thrive without the founders, but
Mm.
it can still run on its own. It kind of means the entity is ready for
Okay.
a sale or a merger into a larger organization.
Mm-hmm.
Uh, a trigger for us, we were continuing to grow, right? So a trigger for us was, okay, we can keep growing in our bootstrapped, less investment structure, or be part of a larger organization to have that growth much faster.
Okay.
So that played in a lot. There was also a bit of a consensus among the core team or the founding team that it is probably time to blend into a larger organization to accelerate our aspirations of scaling.
Okay.
So all of this kind of blended together, but there is no single right time. I think the real answer to your question, it's the right time starts, and then it can be right whenever you want to make it right or whenever the market responds.
Got it. So why not raising funds from, let's say, P's and all as compared to selling it to Zorin? Like, why not that?
That was also an option. That was also an option. It was a little difficult for our size,
Okay.
probably, to be attractive to a PE with very
Okay.
deep pockets. And again, PEs also would prefer to completely buy out a company our size rather
Okay.
than just invest in it. I think those two. But again, I don't want to speak on behalf of the PEs, but yeah, in our experience, I think our size was l- a little less at that time. to
Okay.
attract a very big PE to fund us.
Got it. Got it. So was this something you were actively exploring, or did the opportunity just knock your door? Like what happened exactly?
So we were not actively exploring, and I would say
Okay.
that because we did never hired an iBanker to scout
Okay.
for deals in the market. But we were definitely very actively responding to any queries that came.
Okay.
And we have been getting queries for uh, 2, maybe 3 years into the sale, 2, 2.5 years. And we
Okay.
have responded to some of them with a lot of interest. And then a few of them came towards the end. So, yeah.
Got it. And how many potential partners did you speak to during the process? And why Zonet? Like what stood out? Why not others? And was there any tiebreaker with any of the other buyers?
Yeah, all of them actually. So, in the sense, all the things you said are true. So, we spoke with many potential buyers, maybe 3 or 4 over that 2.5, 3 years that we spoke about. And at the end, there was Orient and another opportunity. The vision or how Thoucentric would fit in was a little different. Both were extremely attractive propositions. Xoriant had a PE backing,
Okay.
whereas the other was a subsidiary of a listed company. So the story about what Xoriant or what Chris Capital really was trying to do with Xoriant seemed very exciting
Okay.
because that was also a founder-led company that recently got sold. We were kind of a founder employee owned company in a way, and then blending the two with complementary skills. Xoriant is has great high tech and BFSI customers, whereas our focus was our the way we evolved, we had more of CPG and manufacturing customers. We worked in supply chain and sales and distribution, a lot more business process oriented, whereas Zorient was a lot very strong in their software development
Okay.
area. So the complementary skill set, the concept of, a large company, small company coming together with private equity, market leadership, this seemed a very exciting and interesting journey to be part of.
Got it. So apart from PE backing, good vision, complementary skill sets, do you think you also give some weightage to like culture of Zorient, or maybe what
Uh,
employees getting placed over there, also some weightage to selecting Zorient as compared to others?
Not at that time, to be very honest.
Okay.
So our exposure to Zodiant was really through the Chris Capital team who were working with us. There was a little bit of exposure to Zodiant. No complaints about the culture, but I don't think that uh, played or we tried to utilize that as a
Okay.
yardstick to. I mean, we saw the leadership and it was it was pretty attractive. Yeah.
Yeah. So thanks, Archie, and congratulations for the deal. Now, would love to reflect on the deal, right? So, what do you think? What factors made Zorient acquire you from their perspective, right? If I have to ask those questions,
Yeah, we should ask this to somebody in Zorient, but
I'll do
yeah, I
that
think,
for sure.
yeah. So I think, and what was told to us is that complementary skill set,
Okay.
right? And I think the nature of customers that we had some really, really desirable logos in our customer list. We continue to have that. That can seem attractive to any private equity backed business that is again getting market leadership in to expand and scale it. And of course, our people. So
Got it.
during the during the knowing each other phase, they got exposure to our founding team, and we are one of the best practitioners in their fields. I can vouch for that. Same with our last level consultant also. When you talk to a Thoucentric consultant, you'll probably think they represent a very mature, large setup
Okay.
because of their ability to navigate into customer organizations and get things done. So yeah,
Got
I
it.
think our people were the
So you
main,
have
followed by the customers.
customers, people, and corporate scale. So where
Yeah.
did you had most revenue? Was it mostly US based, global, or India? Like, do you think the location of the customers also mattered apart from the size of the logos? Were the enterprise clients, mid market, or SMBs?
Yeah, of course. I mean, see, two things happen in Indian companies versus, let's say, European companies versus US companies. Uh, One is the philosophy of a company of what to invest in or
Okay,
what to outsource and what to build, uh, a cost item for. Like, do you do this internally or do you use a consultant? And how much are you ready to pay for that?
okay,
That comes through a cultural mindset, which I think is a little more experimental in the US specifically. To some extent, Europe is a mature market in this matter. So yeah, it's the ticket sizes are a lot bigger when you have customers in the US and UK. But the quality of work that somebody is ready to trust you with is a lot more easy to uh, enjoy. It's easier to get good quality work in India, but you kind of don't get paid too much for it because of
got it.
I think a history of saying, "Oh, why should I spend this? Let me try to do it myself." Right? And in terms of most of our revenues, it was quite evenly distributed actually between US, Europe, and Europe. I include UK in that.
Okay,
US, Europe, and India.
got
And
it.
it was more a function of which customer we onboarded sooner.
Okay,
Uh, we were actually quite an attractive company to do business with for international companies who are just about setting up GCCs and or a knowledge center in India, because the Indian leadership could very easily validate our capability and potential. And generally, they had a budget to say, okay, this is what we will insource, this is what how much we will do through external suppliers. So,
got it, got it. Makes sense. And generally, how are deals structured in your space? Like, because a lot of founders do ask me, how are the deals structured, variable or not? So, what is your view on that? What has been your learnings?
so the two things that are constant is, or one thing that is constant is the entire payout will happen over a certain time,
Okay,
right? 2 years, 3 years, 4 years. And you'll get some bulk payment upfront.
okay.
Uh, Now, how you get paid later is a matter of negotiation.
Hmm.
And yeah, sometimes it can be performance driven, sometimes it need not be performance driven. It will be performance driven in some way, but it need not just be business performance or, things like that. So yeah, that is up for negotiation. But you have to take it in a few years. You cannot take everything upfront.
Yeah. And why are few deals very upfront heavy and as compared to few deals? Like I've seen in few deals, 95% is upfront as compared to few deals having 30% upfront, right? Do you think it's all about negotiation with the buyer or it's also because of some factors which contribute to those deals?
Well, if you have something that has 95% upfront, you should have told us before.
Okay.
But okay, well, that was a joke. Yeah, so I personally think it's one is negotiation, right?
Okay.
And the second is also how important the key people who are getting paid
Yeah,
for transitioning the company into the larger company.
got it.
So if you're more dependent on those people, you would try to lock them in
Okay.
with deferred payments, right? So I think that's how it works. Both the numbers you quoted are very off, though. I haven't heard of a 30% upfront or a 95% upfront either ways. Maybe if the founder is completely detached from the business and
Yeah,
has got nothing to do with the business, at that time,
maybe
that
90.
95% and all might happen. But again, I would say then the total value might be a lot less too because founder is no more important for business.
Got it. Got it. Makes sense. Now let me
Mm,
ask you one difficult question, right? Do you feel after the deal happened that did you leave any money on the table? And if you had to go back, would you do
mm.
something differently to get more value out of this deal?
If you make me think about it, yes, I will make more. I would want to make more money. Why not? But I wouldn't walk out of the deal if there was no money.
Okay.
So everything remaining the same, uh, the circumstances, the situation, where Thoucentric was, where Chris Capital was, where Xoriant was, where the market was, where we were as individuals, I think we would have done the same thing again. Uh, and leaving value on the table, uh, you always leave value on the table is too large for you to uh, get all the value from the table. Yeah, there's no point thinking about it, and these are decisions made, and you move on.
Got it. Yeah. So thanks, Archie. Now let's move to the most important section, that is advice to other founders. So there are many founders who want to exit the companies in 1 or 2 years, right? They may be thinking, they may not be thinking, or they may have these minds, right? So what advice do you want to give to founders who want to sell in 1 or 2 years from now? Like how they should be prepared to get the best deal out of the table?
So make the company ready to be sold, right?
Okay.
So try to make sure the company can run on its own. Only then it is attractive,
Okay.
right? So that's the bare minimum. If you're not aware of potential buyers, probably hire an iBanker.
Okay.
Um, but if you've already had interest from some people that you did not respond to, nothing hurts in reaching out to them again. Uh,
Okay.
so yeah, if somebody's decided, they should start looking. And the entire process, if you, I don't know, we've never really scouted for a buyer, but I'm guessing it takes a while to find a buyer that you will like. Give that the I don't know, 6 to 12 months maybe, and then the entire process also after you've decided is also fairly long. So
Got
yeah,
it.
you should target to identify a buyer in 12 months. And if you don't know how to do that, getting an iBanker, I think.
Got it, got it. And are there any parameters like, for example, make a good leadership team that is sustainable, or get good customers, or improve the quality of customers? Some things that you can do to get the better value for your business?
Yeah, but again, since the timing of your question was somebody wants to sell in the next 1 to 2 years, I'm
Mm-hmm.
assuming the business has been running for 5, 6, 7 years at least.
Yes.
So changing the nature of your agreements and contracts is not an easy thing. You
Okay.
either start with that philosophy or you adopt that philosophy for future customers,
Got it.
right? So that is a very good advice. Thanks for pointing that out. But I think that should be a call a business makes earlier in the days itself,
Okay.
right? Not in the last 2 years before selling.
So what if I want to sell in 3 to 4 years, right? Are there any tips like if you want to sell in 3 to 4 years, something that you can do like to get a better value or do be more attractive to the buyers?
Yeah, again, quality of I'm assuming this services business,
Yeah.
so the quality of your customers, their creditability, right? Credibility and creditability. That is very important. Your revenue should translate into actual money coming in. Your customers pay on time. Uh, the internal organization of the team should be kind of self-sustaining because you'll get investment only from private equity, not venture capital, unless you have product or you're doing a service of the future,
Okay.
right? Um, so yeah, it should be a profitable business with very clear, at least the investor or the buyer should be able to visualize, okay, if I buy this asset, I can grow really fast. And they can grow really fast if you have good customers and if you have an organization structure that can scale up
Got
really
it.
fast.
Yeah. And actually, a lot of people ask me when is the right time to sell? Is it when you are between 5 to 10 million revenue, or 10 to 20, or 30 to 40, right? Like every founder has two minds. Okay, should I sell it now, or should I just grow it and sell in few years and get better? So what advice would you give to founders on what is the right time to sell your business?
Whenever you have a buyer, I think it is the right time to sell.
Okay.
Whether you choose to sell at that right time, there will be multiple right times.
Uh,
So if you have a buyer at 5 million and you are okay to sell at 5 million, why not?
Got it.
Some people might say, I don't want to sell at under 50 million. I know there are buyers, but I don't want to be entertained right now, or I don't want to entertain them right now. So that's a different call. It depends on your aspiration, your energy levels in. See, you spend a lot of energy growing something
Yeah.
from 0 to 10 or 0 to 20. Uh, is the same energy optimal to take it from 20 to 100?
Got
Probably
it.
not. You
Got
might
it.
have the energy, but you might have to think afresh.
Yeah.
And it's very difficult to do that in something that you have yourself created
Mhm.
from 0 to 20. But some people do that. And if they believe they can do that, you shouldn't sell.
Got it.
But yeah, if sale is in mind, let the market also drive it a little bit, because you think you're very good to be bought, but there are no buyers. It doesn't make sense. It's like a leader with no followers, right?
Got it.
So, yeah,
And I personally
the-
believe what it takes to go from 0 to 10 is very different to what it takes from 10 to 20 and 24 to 9.
yes,
So if you're very
yes.
confident you have the right skills, right pathway, then maybe
You
another
might
way.
have the skill. See, you're playing football,
Yeah.
and then suddenly you have to come and play cricket,
Yeah.
right? First half football, second half cricket. That's difficult than saying, okay, a full game of football and a full game of cricket. So maybe if you're in that situation where you pick something up at 10 million, you can grow it to 100.
Okay.
But now inside the same system, you've made it 0 to 10. You now have to make from 10 to 100. Might need an adaptation that a lot of people may not be ready for.
Got it. Got it. No, it completely makes sense, actually, right? And the other question that I had is like a lot of companies get inbound interest, and nowadays I believe few people get like around 10 inbounds per week or per 2 week, right? So what advice would you give to those founders who get a lot of inbound? Should they respond to them? Should they not respond to them? Or should they selectively choose which one to respond? And how to manage those inbound interest as a founder and CEO when you're so much optionally involved in the work, right? So, what advice would you give there?
So I'm probably not the right person to give advice. I've not been through that situation where I'm getting 10 inbound requests per day. But be selective in your responses. I wouldn't turn down all of them, even if
Okay.
I'm not wanting to sell. It's interesting to know what the market feels about you. So it's fine to
Okay.
encourage one or two of those. Um, but if you have decided to sell, obviously you should respond. There's no question. But should you respond to 10? I mean, it'll take up too much of your bandwidth.
10
I
is
think
just
you
a
should
number.
have,
Like, it could be two or
yeah,
three. I'm just, yeah.
yeah. But having a conversation a month, I think is fine.
Got it. So, your
Yeah.
advice is that founders should at least have conversation with good selective
If
inquiries.
there is an inbound, yeah, if there is inquiries, you should see how the market is
Got it.
feeling about you as an asset or your company as an asset.
And maybe this will also give some reality check to the founders on
Yeah,
how the market is seeing you and what you can improve further to get more values.
yeah, yeah.
No, it completely makes sense, right? And a lot of people, when they get inbound inquiries, the first thing they ask is what's the valuation. So we keep telling them, let's wait, have a few conversation, right? So when do you think is the right time to discuss about the numbers and who should discuss it about first in the scenario of inbound inquiry?
And then inbound inquiry, I think there will be a question coming at you about
Okay.
valuation. And if you have not thought about a valuation, you should say you have not thought about a valuation. Uh, or you should say that, honestly, I'm just having this conversation. We never thought about selling. Uh, you should wait for that question to come.
Okay.
If you start with a valuation right away, it means you have already pegged a value. And it's also fine if that is the real situation where you say, okay, I'm going to talk to you only if my value is, X. This is what we feel. It's not a wrong strategy, but if you are more keen to kind of make it work rather than be hung up on a value, I
Mm-hmm.
think you should wait for the question to come.
Come. Got it. And if the question comes what should founders answer? Should they talk to other peers or should they talk to bankers to get some guidance? Because I know people don't know what's happening in the market, right? So
Yeah, in that case, I guess you should look for expert advice.
okay,
Sometimes, by the time you come to the real transaction, though, you would have had some conversations and got a bit of. Well, but yeah, I think your question is more about when it happens first. What do you do?
yes,
Yeah, I mean, have talked to some peers, talked to friends who are in the iBanking space. These directionally, these numbers are available,
okay,
right? You can probably ask ChatGPT and find an answer as
yeah,
well.
that makes sense. Yeah.
So yeah, go a little more informed than being looking like a novice completely, but wait for the question.
Got it. Yeah. And for example, you want some expert advice from bankers, right? So how did you go about choosing, or how should we go about choosing which banker to work with, right? So there's so many bankers in the world, right? They keep reaching out to these sellers, hey, I would like to work with you. So how do you choose which banker to work with?
That is like it's like choosing a business partner in a way for that particular period, right? So you have to talk to them and get confidence and believe that yes, they will be able to attract that part of the market where you would best fit in. So be very sincere and honest with the banker, or this is a standard business advice, I guess. Whenever you're choosing to do business with people, be very, very honest and again, value honesty from the other side. And then you'll see that you'll probably feel like working with somebody a lot more than another person.
Got it. Good. No, makes sense, Archie, right? And like when these founders choose a buyer, like let's say any typical founder who has two or three offers, which is moving towards last stage, right? What are the four, five, or top two, three things that a seller should look at when choosing a buyer? Is it only money, or is it a mix of money, culture, or what your team is getting, right? So, what are the top three, four things which founders should look at when choosing the right buyer for him? And what are the non-negotiables? Like this cannot happen. What's your last advice? Yeah.
There is nothing. See, it is a very company. When I say company, there'll be a group of owners, I'm
Okay.
guessing, in a services company, right? It kind of depends on what that group is looking for.
Mm-hmm.
Uh, Money has to be one of the items. I mean, you cannot rule out money. Everything you said, how the fitment happens, what happens to the people, they're all virtually non-negotiable at a certain point,
Okay.
but negotiable probably below the line, right? And same with money. Certain amount of money is non-negotiable, but beyond that, you say, okay, above the line, that's negotiable. And then you draw out something, and as you go through the details of the negotiation process, you try to build those things in. Uh, but yeah, how much somebody might say, all I need is money. I mean, my job is done. Somebody might say, well, it was never about the money. It was more about what happens to my people, what happens to my customers. And they're all fine in their own regard. But yeah, don't ignore any of them.
Got it.
Yeah. Keep some non-negotiable limits for each of these attributes. What happens to the people, money, and the future of for your customers whom you are serving as well.
Got it. No, this makes sense, right? So now the deal has happened. So now you're a part of Xoriant. How does it feel like? What's next for you?
Yeah, it feels very good. Last 2 years have been a very, very different life
Mm-hmm.
than what I've lived before professionally. So yeah, I have adjusted to it. It was a change I am having times consistently going through managing that change for myself. And what next for me? Let's see. We'll figure out. Time will tell. Right now, life is good though. Yeah.
No, no, good. So thanks, Archie, for joining us and sharing your insights. I'm sure people who are looking to sell will find this very valuable and they may reach out to you for a
I
few
hope so.
questions and advice. So thanks again, Archie, for joining us and thanks for your time.